Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia in collaboration with UOB Asset Management. And this webinar is managed by our company, LifeChamp. Today, our webinar title is Dragon Taking a Break? My name is Shen Chu. I'm the moderator for this webinar. Now, China capital market has got a stellar return since the beginning of the year when they announced they're reopening their economy and their borders are now open. But since then, they have faced several headwinds. We have the slow economic recovery, the stagnant property sector, the US Cold War, as well as the Western containment. So will China survive amid all these risks and dangers? Is Dragon taking a break right now? So we're going to explore this sector in this webinar. So before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. So allow me to introduce our speaker today. We are very honored and excited to invite the Chief Marketing Officer of UOB Asset Management, Mr. Edwin Lee, to be our guest speaker today. Now, Mr. Edwin Lee is a Senior Director of UOB Asset Management, joined UOB Asset Management in October 2018. Commonly seen in feeds of Facebook, Instagram, YouTube, TikTok, and other social medias, Mr. Edwin initiated a program named 1 Minute Insight, a 1-minute video program that shares the latest UOB AM insights on the latest market outlook and investment strategies in an easy to understand manner. So OMI comes with 4 languages, namely English, Mandarin, Bahasa, and Edwin personally hosted the Cantonese dialect. Wow. So Mr. Edwin carries with him more than 20 years of experience in various financial industry, from banking, life insurance, general insurance, unit trust, to capital market. In his last assignment before joining UOB AM, he spent almost 4 years with an international fund manager where he has successfully made the company presence felt amongst banks and independent financial advisors, IFA, where he also successfully brought the interest in India market to Malaysian investors. He has also been the regular speaker by invitation in various public seminars, especially on his forte on China economy and One Belt, One Road Forum. He has also been invited by Securities Commission's SIDC as the facilitator to provide the insight of the China market. So welcome to our webinar, Edwin. How are you today?
Good, Shane. Thanks for having me, Bursa, and thanks for hosting this event, Shane. Very excited. Yeah, I never expected that, during first thing is late at night, 8:30, and on top of that, economy has reopened. Yet I see there is a lot of participations in the webinar at this, during this time. I think it's amazing. Amazing crowd.
Cool. We can't wait to learn from you. So let me stop sharing my screen and hand it over to you.
Thanks, Shane. Okay, let me just. So, Shane, can you see my slides? Just
yes.
A check.
Perfect. We are seeing full screen.
Okay, good. Hopefully nothing blocking you, yeah? Okay, all the small windows I've tried to close, okay. So good evening, everybody, and thank you for actually attending a night talk about China. And I think when we talk about China, there is sort of like a real roller coaster this year, right? Especially once China announced the reopening back in end of last year, there was a lot of hype on China, and what you notice is that back then, earlier on, a lot of economists were telling you that, they are very bearish on China 2023, GDP growth, whether they can still meet the 5%. And then suddenly when China opened up, all the economies started to tell you that, okay, China should grow beyond 5%, and they started to revise up the GDP expectation for China. And now that the economics are facing a bit of headwinds, and now you have also started to see some economies coming back to tell you that, oh no, okay, we revised down. So from revising up, now revising down, it's like really a roller coaster, right? So the question now is that what has gone wrong on the China recovery? So we should probably for today, I could actually share a bit of our take, what we think thing has gone in China, and how do we think things going to will fare from now on. All right. This is just brought all the indices that we actually plug from, be it the onshore China stocks or be it the offshore China indices, right? So what you notice is that ever since the reopening was announced, there was a hype of the market. I think in regards whether you're looking at the onshore market or the offshore market, you can see there is quite a strong rally early part of that year or the year. But post Chinese New Year, things doesn't seem goes right? And what you notice is that all the market started to plunge in regards onshore, offshore. And today, as we are talking today, most of the market actually has back to the square one, as if that the hype of the reopening has not even started. All right, it's back to the square one now together. So, question is that what has gone wrong on China, especially those who are actually playing on the consumption play of China? Okay, couple of things that what we can observe over here is that during the Labor Day holiday, somewhere in May, in the month of May this year, on the broad picture, the headlines looks very promising, because what it shares with you is that the real people travel on the railway, people travel on the airplanes are all better than pre-pandemic that was in 2019. I mean, there is a sign of recovery that is very strong. But as being so-called ourselves as a China expert that we want to term ourselves, we actually go into a little bit in depth to see if this is true. Okay, and what we notice is that, in fact, when we do an analysis in terms of average spending per person during this particular holiday as compared to 2019, what we notice is that per trip spending was actually 10% lower, meaning although the overall spending looks gone up, but then again, if you divide by into the per capita basis, the spending actually is down 10%, right? So you want to know the reason why, probably these couple of observations that we have is that, first thing, people prefer to travel cheap. All right, travel cheap means instead of going for a long holiday, they choose to go for short holidays. And second thing is that they prefer to go for a cheaper city, a more rural area, so that the cost of spending is lower, right? So, and what probably we also notice in Malaysia is that, you hardly see the Chinese tourists come back to Malaysia. I think Penang is a very obvious one. A hotel that I used to stay every time I go to Penang is where the hotspot for the tourists, Chinese tourists. And then when I was there in China, in Penang, I don't really see the Chinese tourists coming back. So that is telling you the full-fledged of consumption recovery of China is yet to be realized as of today. All right, I'm gonna go to the next part. What happened to the consumption recovery that we do not really been seen as what a lot of economists expected? Second thing is that what we notice also is that despite the interest rate, unlike the rest of the world where you have interest rate hike, including Malaysia, China is probably one of the very few countries that has the interest rate cut. Although it's not a very huge cut, but the interest rate actually is moderating down, right, slowly. But when the interest rate moderating down, a funny observation that we found is that instead of triggering people to borrow, okay, what happened is that the Chinese people choose to settle off their loan, okay. And there was a prediction, an estimation done by economists is that during this particular period, estimated 700 billion US dollar or 4.7 trillion yuan worth of mortgages has been settled. Is about 12% of the total outstanding mortgage in China. Wow, if any bankers were to be here, you will be jumping, right? If you're, especially you are on the retail market, retail head, you might not like to see these kind of numbers, the loans being settled. 12% is a very huge amount. So that was a situation. And the question now is that, is it really that bad that the Chinese people are not spending? The answer to you is no. All right. If the Chinese people are really choosing not to spend, then the economy of China shouldn't be growing at about 4.5% in the first quarter of this year. Right. The fact that the economy, the GDP is still growing at a very fast pace, in a way fast pace for such a developed market or such a big market like China, that's showing you the consumption is still intact. Right. But if you really play on the recovery story, on the consumption story in China, what are the sectors that probably we will look at is very much the experience sector. So people don't spend for goods, but rather for experience. Like for instance, over here, it shows to you the total retail sales, consumer goods, is a bit of uptake, but goods sales in terms of physical, tangible goods, the sales is actually a bit low, all right, or pretty flat, whereas the restaurant revenue actually spike up. So meaning it shows to you that people in China are spending for experience-wise, especially comes to food. Right, beside experience, where are Chinese spending, other than the services for experience, for food, what we also notice here is that Chinese people are spending towards cheaper products. Okay, how do we define cheaper products over here, and how do we do the analysis over here is that we use the e-commerce as a proxy. Why e-commerce? I think I don't have to tell you, the e-commerce industry in China is really advanced as compared to many other countries in the world, right? And what you notice is that in China, the e-commerce industry are practically dominant by three major players. You have the PDD, Pinduoduo, Alibaba, JD.com. But what you notice over here during since the reopening, you have seen the revenue growth in the first quarter of Pinduoduo is actually 58%, whereas Alibaba and JD.com is only about less than 2%, right? And in terms of market share, you can also notice that Alibaba market share actually has shrunk, and whereas JD.com stagnant at 20%, whereas Pinduoduo has increased from 10% during the pre-pandemic to 18%. Okay, on particular this observation, what we actually concluded is that Chinese people spend for food. Second, what they will spend for is a cheaper product, a little bit more inferior product as compared to what we used to see China is that, every time when China shop, they shop for branded stuff, especially the European branded stuff in a huge, quantity. But this time around, things are look a little bit choppy, okay, where they actually prefer to spend on something cheap, okay. For those of you who do not, I believe you all know what is Alibaba and JD.com, which is very common in China. Pinduoduo is actually a platform where people buy in bulk and at a very discounted prices. So it is like a proxy for us to use to gauge on buying for cheaper or a little bit more inferior products. So it shows to you that when Pinduoduo is doing well, it shows that the Chinese people are spending more towards little bit more inferior products compared to the high-end products where they used to be. All right, coming from this particular landscape, probably there will be a lot of economies will be eyeing on what is happening to the employment situation in China. And I think for those of us here who are English English background, meaning you read only the English media, this is probably what you have read in all the mainstream media, right? And be it Financial Times, CNBC, or even Bloomberg, they will be telling you that China is in deep trouble because the youth unemployment is hitting 20.8%, meaning it's like every 5 people, every 5 youth that you met. Youth here is defined by the people between the age 16 to 24, right? So anyone that, out of 5 people that you meet, one of them has no job, all right? So, and there's a very serious problem that is being portrayed to you by all the Western media, okay? This is what probably you have read, and I don't have to repeat. But let me just share with you, is this only happening in China? Okay. The statistics over here suggest otherwise. If you look at the headline unemployment, right, most of the country looks pretty decent. China about 5%, Germany 5.7%, France a little bit high at 7%, States is about 3.6%, Malaysia about 3.5%. But if you zoom specifically into their youth, right, of course, different country has a different definition of youth, but more or less is the range of the age almost the same. Okay, China is 20.8%, but generally, if you look across all other countries that are highlighted here, probably you can relate, is that youth unemployment is actually always higher as compared to the headline unemployment. Question is, why? So China is not the only one that have a huge youth unemployment, right? Many other countries also have that. So what do we think is happening in China? Right, it's because what we felt is youth today are very selective when it comes to the job, okay? You ask them to work for people or work in a restaurant, they might think twice, okay? And in China, online sales is really, rampant in China, right? I think you all have seen all this. And estimated in China, there are about 10 million Chinese, or more than 10 million Chinese KOL. KOL here stands for key opinion leaders, or in short, they call it the influencer. Those people that go online and sell products to you. And these people are technically being seen as unemployed because they are not attached to any company. They just go on live to sell online, okay? But these are the people are not without income, okay? And some of them, I would say, have potentially earned more income than any of the CEOs in China, okay? So that is the situation. So like I said, don't be, I won't quote the word misled, but don't just see one part of the story, but rather see things as a more totality, because today media will tend to give you a view that is probably a bit more biased to what their opinion is. So therefore, it is very important that, especially comes to news on China, you need to balance up between the Western and the Chinese media. Right, and what can be done? Okay, what can be done to overcome, the lack of spending in China? One of the key things that we notice here is that the people are not spending not because they don't have money, right? The people are not spending because they felt insecure. After about close to 3 years of lockdown, it actually hurts the sentiment of the consumer in China. And therefore, what we also notice is that the individual savings in China has also popped up. If you look at, as compared to 2019, they are expected additional 6 trillion RMB, additional spending, additional savings gone into the banking system. Okay, and that is telling you people are a bit more conservative in China, and that's why they are not spending. And the challenge also is because of the property sectors in China, which is also are seeing a very sluggish demand at this moment. And there is a couple, or not couple, I would say quite a fair bit of the Chinese developer who are facing cash constraint. So therefore, that actually hurts sentiment in China. So probably your next question will be, can China roar again? Can this dragon roar again, especially this year? Couple of points while waiting for the dragon to roar again. What we actually choose of seeing the opportunities, selected opportunities in China, will be a bit of cherry picking on the AI stocks, which we felt that there were a hype on that when ChatGPT rolled out, and now the sectors has actually corrected, and now I think it's a good time for people to look into a bit of cherry picking on those artificial intelligence stocks. And second thing that people can also look into a bit of something we call it a conservative consumption recovery play. Okay, and third is a EV, especially on the battery makers or even the supply chain of EV. And fourth is the Belt and Road revival. So I'll share a little bit detail on some of these opportunities that we see in China while waiting for the dragon to really come back and roar again. Okay, first thing, let's talk about investing into AI. How should you capitalize or investing our strategies to invest into AI? Is that, to be frank to you, as of today, despite you have ChatGPT and many other names there in the market on AI, there is still no definite definition of what is AI. All right. A good example, as Malaysian, we use Waze for our GPS. Okay, is Waze classified as AI? Yeah, to a certain degree, there is an AI, but it's not really a real AI as what people hope for. Okay, so therefore, AI is still in a very gray area. So therefore, it is not advisable for any investors to dump, or like show hand into a particular stocks. What we do is that we rather go for a more machine gun strategy, which is we try to hit a couple of companies and various kind of sectors and to capitalize on AI. And one of that you can look for is like the supply chain of AI, right? Things like the supplier to the chip maker, the infrastructure providing for AI, okay? And to that extent, you can also play on the downstream side where it's the users of AI, okay? Where, you have robotics, manufacturers, education, gaming, okay? Probably I just quote a good example over here for gaming. How does an AI helps be for a game that without AI and AI? I'm not sure how many of you play mobile games, on your handphone. I myself, year in, year out, century out, in a century out, I only play one game, that is football, right, on my phone. Probably because I can't really run on the field, so compensate it with my mobile phone. So those were days, if a football game without AI, for instance, we like to watch football and look at the strategies. And one of the football strategies that we always heard about in the football, sorry for the ladies if you don't really understand what is this strategy called. It's called 1-2. I think you all know what is 1-2, right? Meaning you pass the ball to your partner, to distract your opponents, and your partner pass it back to you just by one touch. So there's something called 1-2 in a football strategy. So if a mobile football game without AI, you can pass the ball to your partner, but your partner would not know how to pass it back to you, right? That is without AI. And with AI, you actually enhance the game to make it felt more lively, that it can think like a human being, that when I pass to my partner know that I like the 1-2 strategy, it will pass it back to me to distract the defender. So that is what AI is all about. And gaming has also started to adopt AI. And that's where also one of the strategies they can adopt. to play on the AI hypes as we are talking today. The other thing that probably I will share with you is EV. I think today I don't have to tell you, EV, even in Malaysia, we felt the heat of EV, right? When BYD launched the Atto 3, I think you all can see in the news day in, day out that the demand is very huge for the BYD new car. So what I'd like to share with you is that in China, especially, the Western auto brand, right? Not only in EV, but across even on the fuel combustion, has actually is starting to lose ground to the Chinese brand. In fact, as of May this year, China has overtook Germany, has overtook Japan, as well as United States as the largest automotive producer in the world, right? Hard to imagine, but it is really happening. And if you look at the reason why the Western auto brand is losing out to the Chinese brand, a couple of reasons is that first thing, the Chinese EV, particular EV itself, they know what the consumer wants. All right, they are flexible and they don't have a burden of legacy concerns, to be more flexible to adapt to what consumer wants, right? Good example over here is that one of the brand called Neo, okay, offers karaoke application and system with 10 million songs in the library inside the car infotainment. So technically, you can look at the picture over here. You see the Chinese actually can sing karaoke in the car. So I think karaoke is known as KTV in China. So, and I don't have to tell you, for those of you who knows China well, the Chinese people likes KTV, okay? And to build an infotainment with a KTV inside the car, I think is unimaginable for a lot of Western brand. Until today, a lot of Western brands still cannot understand why a car, you build an infotainment karaoke system in the car. But while they are thinking, the Chinese brand has actually capitalized on this and actually been leading the market. The second thing, a good example why Chinese brand has been capturing what people, the market share on automotive is also another good example over here is afternoon nap friendly. I think some of you could have known that there is a culture in China where employer during the lunch hour, they will actually give a bit of time for the staff to take a nap, right? And what they found is that when the staff taking a nap, they tend to be more productive subsequently. And what happened is a couple of brands over here like Xperm, Wuling, has actually made their car, okay, in a way that is very car friendly for people to take afternoon nap. And just look at this particular example. Besides having a very good infotainment that just like, you lay on your house bed and, you can flatten up the entire seat. So this is where it actually captured the demand in the market. Okay, so that's what's happening. And this is something that, a very good space to look at. And definitely Malaysia is one of that we are looking, the country is driving us towards more towards EV. Okay, talking about EV, as long as you are moving into EV, what probably I can share with you is that you are likely to have your car, even though if you are anti-China, you don't like Chinese product, right? But as long as you are buying an EV, regardless what brand is it, they are very likely that you have a fair bit of components of that EV cars that is made in China, right? A very good example would be the battery, okay? And China is the largest battery supplier for EV throughout the world, okay? And this is nothing new probably to a lot of you, but what I would like to share with you is that just how important is this particular phenomena, right? And what you notice is that ever since the EV fever started, what you notice is that things like lithium, which is very important component of a car battery, the lithium price has spiked up almost 600%. And that is post-correction, yeah? Before that is far, far higher. All right, same goes to nickel. You know, it go very high before it corrected and it's still up 41% since 2021. All right, and just that, you know, if today I ask you to invest into, look into lithium or nickel, probably, you know, it's a little bit backdated because market are really exploited on that. But there is something that we notice, market is still underappreciated of one of the raw materials on the major components of an EV, which is copper, right? If you look at in terms of this particular bar chart on your left-hand side, you will notice that the copper demand is not only in conventional car, but when it comes to EV, the demand for copper has increased more than double, right? But sad to say, I'm not sure sad or happy to say, till today, the market has still not realized about it, which is why copper, as compared to lithium and nickel, has only up 9% as compared to the rest, which has spiked up as high as 600%. So there is some opportunities that we are seeing also in the copper play as far as EV is concerned. All right, I'm not sure, do I still have time, Shane, or should I stop here?
Yes, you can still go ahead.
Okay, I hope I don't make everyone lullaby and sleeps here, yeah? So I go a little bit into a more political aspect of it. I think there is nothing to hide that US and China is in a Cold War, all right? I think, like it or not, although you can say it's a trade war, it's a technology war, but the fact is that it is beyond that, right, as what we have seen. And why does this happen? And why does US particularly targeting at China? This is nothing new. It is nothing new. And as what my idol has always told me, that, you know, it is an iron law of geopolitical ever since the born of mankind, that every time that you have an emerging power that is about to overtake the current superpower, right, that is where this geopolitical tension will happen. Okay, and especially if you look back in the history of mankind, back to thousands of years, okay, you have this something called the change of world order. So from one superpower, you transit to another superpower. It was like, you know, good example in the diagram here, you see there was a time that Dutch was a superpower, then it overtook by British, and subsequently it overtook by US. And now there are many signs are showing that China is the next emerging power that is to challenge the US as the current superpower. All right. And what is happening is that there are three signs observed in the history of mankind where it leads to a change of world order. These are the particular three signs. First one is that the current superpower, the government ran out of money and started to print money. This is the first sign of the change of superpower is taking place. Okay. Second, there is an internal conflict within the superpower where the wealth gap between the rich and the poor is getting wider. Okay. And the third one is that there is a rising superpower to challenge the current leading superpower. Okay. And all these things, all these three signs are already happening. Okay, which has led to many people believe that the transition of the change of world order is happening. Okay, so probably the sad story that I would like to share today to you is that if you think that this transition this geopolitical tension will end anytime soon, I think I will have to disappoint you over here that it will last for at least another 10 years. Because in the history, it shows that over here, the transition to change of world order, the transition period normally takes around 10 to 20 years. And we are just in a very beginning stage of this transition power. So that is something that we have to live with it, of all this uncertainty in terms of the geopolitical tension. And there's no doubt, you read probably any headlines or any media that you read or any economist prediction. There are many signs that China is on the verge of overtaking US to become the next superpower in terms of the economy, in terms of the size of the economy. There's as early as expectation of 2030 that China should overtake US to become the biggest economy in the world. So what I will try to share with you over here is that, can this be stopped? Can US stop China to overtake, to become the next largest economy in the world? And this is what I actually want to share with you. In terms of GDP, all right? If you look in terms of 2019 GDP pre-pandemic, US was about 21 trillion. And as of last year, US is close to 25 trillion. Whereas China was back then about 14. As of end of last year, it's about 18. So if you look in terms of, be it on the nominal amount or be it in terms of the pace of the growth, China is clearly ahead of the United States. All right. And what more, in terms of the population, although China is no longer the largest population in the world, but then again, in terms of the absolute number of population, China is about 4 times larger than the United States. So what does it tell you here? If US wants to prevent China from overtaking them, so technically, US, okay, assuming the Chinese were to work 8 hours a day, right? In order to keep the pace, with the productivity of the Chinese people, what does it mean is that the Americans will have to work 8 times 4, 32 hours a day, just to keep the pace, okay? Just to make sure the gap remain the same, which I think you know is impossible. So therefore, this is why we think that for US to stop China from overtaking them in terms of the economic size itself, it sounds impossible. And what more, when it comes to efficiency, let's talk a bit on the efficiency between these two countries. And if I were to ask you this question, between US and Malaysia, the Americans and the Malaysians, who do you think is more efficient? Well, as usual, every time when I ask a Malaysian, Malaysian always are being very humble. They always thought that we are nothing to compete against the Americans. But let me share with you this particular example. Okay, this is a use of solar energy. This is how solar energy is being extracted in US, right? In a place that's near to the Las Vegas. This is how the solar panel are to generate the solar power, right? Nothing wrong with this picture, right? Nothing wrong with this picture. But let me just share with you how Malaysia did that. Okay. This is the solar power in the Proton Tanjung Malim plant. So what you notice here is that the solar panel, other than just to use to generate electricity, it is also used to actually as a shade for the car park. So meaning when US use solar power only for one function, the Malaysians actually is a bit more smarter. Okay, they use it beside as electricity for generator. It also used as a way to shade the car park. So in a way, Malaysia is a little bit more efficient as compared to Americans in this particular perspective. Right, then let's look into what happened to China, how China does it? The use of solar power in China, solar energy in China. First thing, to achieve carbon neutral. Second, agrivoltaic. Third, poverty elevation. And fourth, desertifications, all right, to reduce the desert in China. So what it uses is that solar power, the solar panel in China is not only used just for generating electricity, but is also to achieve 4 other objectives. So it's one stone, kill 4 birds. So technically, in a way, if you look at it, this is just one of the examples that in terms of efficiency, China is nothing inferior as compared to America. All right, I think I'll move a bit. This one is a bit dated slides because it talks about the structure of the Chinese Communist Party, which I think I will skip as there are many more slides to share. Okay, as to the next headline, probably all of you have read, India has overtook China to become the most populated country in the world. So, and that's where you hear a lot of headlines that saying that, China population is shrinking, and that will be a lot of trouble moving forward. And just probably I will share with you a couple of our pointers over here. You have heard that when you have huge population, there is always a worry that job creation is not sufficient just to cater for the people. And what more, with all this, artificial intelligence comes in, it could be a possibility that it will replace labor, human labor. All right. So technically, if I were to ask you, between having more population or having less population will be a headache. So I think the answer is very obvious. Having a huge population is potentially a more headache than having a slightly smaller population. And that's what actually probably I'll share here. Other than that, I'm not sure how many of you know a good example to you in Indonesia. Although for those of you who have heard, who have been following Indonesia, probably you know that there are people, the cigarettes actually being rolled by machine. There are also cigarette that's rolled by human. So when we think that why there is human rolling the machine, rolling the cigarettes, when you have people can use machine, the answer is that just to create employment. So having more people is potentially also a headache if you don't have the sufficient creation of jobs. Right. I move on. Will the West successfully in containing China? And let me share with you, if you hear any of the bad, comment about China, China is about to collapse, it is nothing new, right? And here is share with you, ever since 1990, many Western media has been commented that Chinese economy will collapse, but till today, you have not seen anything happen about it. So if you hear any of these headlines that China economy is about to collapse, you might want to think twice because it's nothing new. I will skip a bit of the slide here and to share with you over here. Are we seeing that China to overtake US to become the next superpower? The answer to you is no, right? Whereas what we will believe more is that the world will be getting from a hegemony world where it's controlled by one superpower. It will be a world that will be a multipolar, meaning there will be a multiple superpower in the world, okay, that any country can choose to partner with. And let me just share with you, those were the days that you have G7, the group of 7, which is the largest 7 economies powerhouse in the world, okay, is in a way to control the world economy. But today, you have emergence of BRICS. And what I share with you, when BRICS only consist of 5 countries, Brazil, Russia, India, China, and South Africa, as of today, as we are speaking today now, okay, you have all these other countries that are applying to be part of BRICS, to be one of the members of BRICS. So that will be emergence of a new multipolar world where you have G7 on one side and probably you have BRICS on the other side. And just to give you a perceptions, I'm not sure if any one of you can spot what is wrong with all these pictures. There is no camera trick over here. These are all real pictures being extracted. I'm not sure how many of you do notice what is happening, but I'm not going to review here. Okay, just keep it to yourself. If anyone of you who want to check, just feel free to text Bursa to counter check with me. All right, I will give you the answer. All right, I'm gonna skip to my very last deck. Is as being one of the leader, one of the superpower in the world, can China influence the rest of the world? You know, back then, in my webinar in the month of May, not with Bursa, but my normal webinar, I did share with you how China has influenced our life. Let's look into Malaysia, for example. You see Grab food, you see people playing in TikTok, you see people using QR Pay to pay for the things that they bought, and people streaming live to buy things, right? These are all, if you look at it, who started this kind of culture? These are all the cultures started in China, and is starting to influence even us in Malaysia. And how you look at China influenced the Americans over here is that we have extracted two the most downloaded applications in iOS, meaning Apple and Android in America alone. What you notice is that among the top four, okay, three are Chinese produced application from Temu, CapCut, TikTok for iOS, okay, and then Android is Temu, TikTok, and Shein, right? So you are seeing that, you know, the Chinese influence are not only within Asia, but also in America. Okay, before I end my presentation over here, I will just ask this particular question. I think those of you who are in my generation, I think you know who is this celebrity is, Julia Roberts. Give a guess, what is Julia Roberts' hobby? Anyone you want to type over here, since it's our last deck of the day? Did I see? All right, anyway, I will open, I'll give you the answer. Shopping, okay. Malaysia? Okay, Mazlan said Malaysia. Albert says shopping. Well, shopping, I think is nothing to shout about, and that's the norm for a lady, right? TikTok, okay, good guess, good guess. Okay, let me just give you the answer, right? I let her answer herself.
Do you have any hobbies? Do you have any things that like you do to relax you? Do you?
I do. Well, I play mahjong with my girlfriends once a week. That's probably my.
You all heard the answer? Can everyone hear the answer? Shane, do you hear the answer?
Yes, I did. Yes, I did. She plays mahjong, which is incredible.
So nice, right? So why not marbles? Why not guli? Why mahjong? Could it be a Chinese influence? Right, I leave it to you to answer. Right, so I think with that, I will end my presentation over here today. Let's open the floor for Q&A. Yeah, thank you for the time.
All right, thank you so much, Edwin, for sharing your perspective on China and also the insights into China. So if any questions to ask our speaker today, please write them in the Q&A box, not the chat box, okay? Write them in the Q&A box, not the chat box, so you can easily manage your question. We have about 10 minutes for Q&A. Right. Now, Edwin, no doubt that China has had a miraculous 40 years of economic growth ever since their opening up in 1979. And but looks like now the growth has been slowed down for a bit. The GDP growth has slowed down for a bit. And can you comment about the manufacturers space, like industrial space, whereby a lot of manufacturers right now are shifting away their manufacturing line from China to neighboring countries like Vietnam and India due to the US-China Cold War?
Yep. Okay, you are right to point out this particular point, Shane. Let me just share with you, there were a lot of, I think you probably have heard a couple of months back, there are talks about decoupling from China, all right? You heard about that, decoupling from China. And subsequently, you have heard also from the word of decoupling, then you have heard Joe Biden going around, oh, we are not decoupling from China, but we are so-called de-risking from China. I think you heard about this term. And why is such a drastic change in just a short span of less than half a year, right? The answer to you is that it has always been an attempt by many of these manufacturers to diversify out of China, especially during the pandemic period, okay? And what they found is that, the experience that they have found is that if they were to move out of the China, the plant out of China, there are still a bit of a setback in a way that the supply chain in other countries is not as complete as compared to China. I quote a very good example to you. There was, during the pandemic period, General Motors, I think you all know as General Motors, they actually moved, trying to shift their plant from China all the way to India, right? Because they felt, probably the labor cost is cheaper over there, and the same population. But in just a very short tenure of moving a bit of the plant to India, GM has decided to move back to China over a reason of a very tiny screw that is unable to found throughout India. So there is always a concern about the supply chain as well as the infrastructure, especially on any third world country, not as complete as China. So therefore, what you are seeing is that the emergence of what we call the China plus one. So what does the China plus one term means is that as much as people trying to diversify from China, they are not out of China. They are moving some of the parts of the manufacturing parts to outside China, especially those that are low-end, low skills and low-end products. They are moving out of China. But as far as the main part of it, those that require a high productivity as well as high efficiency, there's no doubt they need to be in China. So there is an attempt, but now it's more towards a diversification, right? From just 100% reliant on China. So that is the situation now that you are seeing. And the likelihood, what we felt is that the country that will likelihood to benefit from this China plus one is, to your surprise, it might not be India, but very likelihood to be in ASEAN, Southeast Asia. That's where our home is.
Okay, is there a reason why you think India may not be the next place?
Okay, couple of reasons. First thing is in terms of population, India has a population, but in terms of infrastructure, there is still quite a lagging of infrastructure in India. That's first. Second, of course, a bit of geopolitical tension between India and China, where you will discourage some China plant to move to India. I think you have seen some of the Chinese company was being victimized or being targeted by the Indian government. Xiaomi, for example, was one of the good examples. So yeah, and that's also discouraged some of the supply chain of Chinese supply chain to move to India. And third is because of the raw materials. If you look at in terms of what China wants, like for example, EV, nickel, right? India is not known to be a major supplier of nickel as compared to, for example, here, Indonesia, right? So there is more in favor for ASEAN rather than India when it comes to China plus one. Although India is being seen as one of the strong competitor for to benefit from the diversification from China.
All right. Now, Edwin, one of the issues that have been confronting China is the property debacle, started by the Evergrande. So, can you give us an update on how is the Chinese government managing this property crisis, so that it won't have a cascading impact to the economy? Because there are literally tens of millions of contractors that may be involved if one of the property sector, property giants like them default, and when the banks, got into trouble.
Yeah, I think that is back in 2020 where this saga started, where there is 3 red lines that the property sector developers are not supposed to cross, and Evergrande is the first one that fill all the 3 red lines, and they are the first one that are being, in a way, being that get a beat get a cane from the Chinese government. What you are seeing is that after prolong of about 2 to 3 years of this particular saga, there is a little bit sign of things are getting to the bottom. One of the reasons is because the Chinese government has already started to instruct the so-called state-owned enterprise developer to take over some of these projects in order to continue complete the projects. And second thing is that you have started. Okay, this one has started ever since last year July. I think you probably have heard the news that last year in July, where some mortgage the borrower refused to pay their mortgage because the construction has been stopped, right? And there was a concern of the bank run during that particular period. All right, and since then the Chinese government has started to step in, and like I shared, they instructed the GLC, the state-owned enterprise developer, to take over that, and then from there on you have started to see some of the construction started to come back, although it's not all the construction stop that's really started to revive. But then again, you have started to see things are moving. And that's also one of the reasons why it drags down the consumption in China, that you have not seen really recover due to the property sector. And there's more avenue that we believe the Chinese government will have to take more to actually help to revive back the property sector in China. So you are seeing the Chinese government to step in. And probably, if you look at the construction, probably you will start to see things to start moving towards the end of this particular year, this year itself.
All right, thank you so much for Edwin, for sharing your perspective. So the next question is, what is your view on the Greater China second half of 2023 outlook, given that the first half recovery was lackluster?
Okay, at this moment, we are a bit more neutral on China, as we are not seeing things fully recovering, and things are not on a strong footing at this moment. But what we also see is that things are very likely to have hit the bottom, right, in terms of the economic perspective. And it's likely that, we found a base from here and things should start to be more positive moving on from here in China. And second thing is that, if you look in terms of the perspective of the consumption, it does make sense, why consumption has not been recovered as what we expected in the month of May. Look back into us in Malaysia, for example, during the MCO, the lockdown period, when we were told that, there's no longer a lockdown, you are free now, what we notice is that there are still a lot of people choose to take away the food. Instead of dining in, they still take away, right? Until today, I believe most of us can also notice that there are still people wearing masks, even in a even in an open space, there are still people wearing masks. So there's still a bit of concern. So things doesn't really recover immediately. It takes time, especially you have a prolonged lockdown. It will take time for people the confidence to come back. And what more, you have the global economy itself, especially the Western side and the States side. The economic rebound has not been a very strong on a very strong foot. So which is why it's also slowing down some of the manufacturing side. So which is why yesterday also you notice that the Chinese government is actually starting to be more pro the tech sector. You notice that the Chinese government actually praises the innovation of Tencent, Alibaba, and so on and so forth. So that is telling you that they might use this particular tech sector as a form of helping to revive the confidence and the consumption in China.
All right, thank you so much, Edwin. So the next question is, will Chinese stocks seize another severe correction like in 2022 with more sanctions from the G7 and attention from other countries?
Let me just share with you this particular point of it. The outward pressure on China, it is not something that is unexpected by China. It is not something unexpected in China. I'm not sure if you all heard about this term called dual circulation back in 2021. All right, back in 2021, early part of the year, the Chinese government, or Xi Jinping, has already mentioned about this policy called dual circulation, which is the external and the internal circulation. And if you look in terms of the detail of this dual circulation, what it's trying to bring you, the message is that they want China to be more self-sufficient, meaning if the internal were to produce product, okay, the product was to first have to take care among the Chinese community in China before talking about exporting. So they want to be more self-sufficient, right? That is something that they already anticipated, that all these things were to happen. The external pressure is going to happen. So they are really well prepared on that one. And to the next one, that probably you will say that the sanction on the high-tech chips that is going to hurt China, especially coming from Netherlands, ASML from Netherlands and from Japan, that now they are in line with the US to stop China of having this advanced 3 nanometer chips and below. Okay, and I think all this while probably you will see in the past, China has always been trying to resolve all these differences of all these sanctions diplomatically. But apparently this time around, things are a little bit different. All right, I think just about a month ago, China just announced an export control of 2 rare earths materials named gallium and germanium. All right, for people who do not know what is these 2 materials is about, gallium is a materials that is for EV, right? It's a very key components for EV and for your advanced chips. So meaning if you do the chips, you need this kind of materials. And for germanium, it is something also on the chips and also on the something to do with aerospace technology as well as solar, right? And to share with you, China control, according to statistics, about 80 to 95% of the world supply of gallium and about 60% of the world supply of germanium, right? So if China were to impose export control on this one, the country that have the technology to produce a very advanced chip might have a problem without the raw materials to produce it, because they have to rely on China. And if they were to start to source for this kind of materials, mining for all these kind of materials, it will not happen until another decade to see things to come into the market. So therefore, you have started to see China is retaliating in that sense. To one of the key reasons is actually China is trying to tell the Americans that they also have things on their hand as a bargaining chip.
All right. Thank you so much, Edwin. Edwin, a lot of foreign investors have shunned the Chinese market due to the fear of the leadership, right? So a lot of people comment that the of concern about the authoritarian leadership, whereby the power is now concentrated into one person and no longer the collective leadership among the 7 Politburo Standing Committee. What is your view of that? Do you think there will be a return of the foreign investors back to the Chinese market?
Okay, I think political aside, okay, I don't want to comment about the political side. When you are saying that, I mean, people have been saying the 7 Politburo members are all the allies of Xi Jinping, as compared to before. There's a bit of check and balance, and now it's like all allies. I think that is for anyone to interpret. Of course, we have our own view, which I think I'm not going to share here publicly. But then again, the point that foreign investors trying away from China, I think I put a bit of caveat on that. Good example is that you look at the Tesla, for example, right? Instead of, I mean, Tesla is an American brand, everyone knows. Instead of shying away from China, what you notice is that Elon Musk actually doubled down on the plant in China, on Shanghai, okay? And the other good example will be BMW, okay? Where Olaf, the German Chancellor, met with Xi Jinping early part of this year. Instead of being harsh, they actually brought BMW along with his contingent to meet up with and in China. And in fact, they actually put up even more investment into China. So that is something that maybe the facts that people are getting is a bit of coming from the Western side. So which you don't see the entire picture. That in fact, instead of having outflow, you are seeing more inflows into the FDI into China.
All right. So I think time is running out. Let's do one last question. I think the previous 5 questions are a bit more tough. Let's do an easy one on the last question. Okay. So how do investors like us, like Malaysian investors like us, gain exposure to the Chinese market?
A couple of ways, if you have some stocks that you like much, I think Bursa do offer overseas trading. I'm not sure but I think some stockbroker in Malaysia do offer, you can actually trade the stocks in US or in Hong Kong, where you can trade it. And for those, the rest who wants to have exposure into China, you can also go for things like unit trusts, for example, right? You have the onshore China, the offshore China. So there are ample of opportunities looking at into the Chinese market to get access into the Chinese market. But let me just share with you this particular point based on my 20 years of experience in Chinese market, is that if you were to invest into Chinese market, okay, never hope that you see immediate result, okay, because Chinese market has always been a market that it could be quiet for a few years, but when it rebound, it could rebound within a year. It could rebound, triple digit. That whatever the time that you've taken to wait for the market to go up, will be paid in 1 year. Let's say you have waited for the market to go up for the last 5 years, it might not rebound, okay? But 1 year of rebound, okay, can actually show you the kind of return that you should accumulate within 5 years. So that is about China. So when you invest in China, I think you have to be a very patient investor.
Okay, so we must have the long-term horizon when we want to invest in the Chinese market. All right. So with that, we would like to conclude the session today. So thank you so much, Mr. Edwin. So ladies and gentlemen, you just heard from the Chief Marketing Officer of UOB Asset Management, Mr. Edwin Lee.
Okay, thank you, Shane. Thank you, everyone. Good night.
Yeah, thanks, Edwin.
Thank you. Bye.
All right, so for those of you who haven't figured out about Bursa Academy. Bursa Academy is a comprehensive one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. It is simplified, user-friendly, and accessible anywhere, anytime at your own pace. You may scan the QR code or visit www.bursaacademy.bursamarketplace.com to learn what Bursa Academy has to offer to you. There are a lot of investing articles, resources, webinars, or even video recordings for you to learn about investment. Our next webinar is titled Fibonacci sebagai instrumen tambahan. So it's happening on the 17th July 2023. It's next Monday, 8:30 to 10 p.m. So if you want to register for this session, here is the link that I've just given you in the chat box. Okay, if you want to learn how do you use Fibonacci to aid you in your trading, then please tune into this session. All right, please register and tune in for the session. So with that, I want to thank all of you for staying tuned until the end of this webinar for you to learn about the outlook for the Chinese market. So we have just got Mr. Edwin Lee from UOB Asset Management to share their perspective on the Chinese market. So hope that you gain enormous value. I hope to see you in our next webinar. Bye, everybody.